So as we close out a highly anticipated week with a Fed meeting and them telling us exactly what we thought moving into that Fed decision, here we sit with rates on the rise as we close out the week. Why? What's going on, y'all? My name is Kevin Weedmark, aka The Mortgage Mouth, bringing to you another episode of the Daily Dose, making sure that you are up to speed on what is going on with interest rates on the daily and what we can expect now heading into next week. Make sure you please hit that subscription button so that you never miss a beat. And essentially what we've seen since Wednesday when the Fed told us exactly what they were going to do, right? We knew what they were going to do going into that meeting. Quarter point rate reduction, labor market is the biggest concern, inflation is still elevated, although they did say, hey, we plan on 2 more rate cuts this year, but we're only thinking about 1 for next year. That right there gave the market a slight pause. Then what we had on Thursday is we had initial jobless claims came in lighter than anticipated, meaning, well, maybe the labor market isn't so bad. And that's going to be something that is going to be a negative for what the Fed just said. Because once again, going into that meeting, the markets were already baked in with the quarter point rate cut and 2 more rate cuts this year. So there were no surprises. So everyone that was sitting on the sidelines thinking, oh, I'm going to wait for the Fed funds rate cut and then I'm going to get a lower rate. No, that's not how this works. That's why you need to be talking to a professional. That's why you need to be talking to somebody that watches this market so they can help you understand how to manipulate the valleys and the peaks. So now here's where we sit. We sit with a lot of sideways movement, rates ticking higher, because now a lot of investors are saying, well, the Fed told us exactly what we knew, and data now is coming in against us. Data is now suggesting, well, maybe the labor market isn't so bad. So it's going to take this coming week and then the following week, because this week coming up, I believe we have PCE, so we're going to get back to our inflation ticker. And then we also have the following week, we're back circled around non-farm payrolls, which is the single most biggest indicator of that labor market. So that could really drive those interest rates. But until then, you're going to have to ride out these valleys if you can, unless you're in a purchase situation, and then you need to be strategic. And if you're looking for help on how to strategize and saving money, costs, lower rates, whatever the case may be, please don't hesitate to give me a call. Anything I can help you with over the weekend, pre-approval, you need a quote, you need a flyer, you're an agent out there, you have a question, please pick up that phone, shoot me a text or an email. I would love to help. All right, y'all, have a wonderful weekend. Be blessed, be safe. Talk to you next week. Cheers.